what I've done is to try and understand the nature of globalization in the venture capital industry. Now, to give you a bit of context, in the venture capital business, what you do is venture capitalists have capital to invest, and they are looking for investment opportunities in startup companies, typically in high tech areas. So they're looking for opportunities in companies that have very high upside potential. Right? These are high risk investments, but also hopefully high reward. Right? Now it turns out that historically this is an industry which has been very, very local. Right? So if you are a venture capitalist in Silicon Valley, you wouldn't want to fund companies based in Pittsburgh. Right? And the reason is that venture capitalists tend to believe that the money is the least important part of what they give. Right? They believe that what they're really doing is to assist the entrepreneur in terms of providing strategic advice, in terms of helping them get situated in the business world. In other words, by lending them their networks. Right? And networks are by definition relatively local. Right? So the conventional wisdom in this industry is that this is a business that is not very likely to be global. Right? So around the year 2000, 2001, I began looking at some data in this industry, and I found that while it is true that this is a very local industry, if you looked at the percentage of US venture capital investments that were going to overseas entrepreneurs, right, and you plotted that on a curve, you found a steadily increasing line. Right? So this was an interesting anomaly, right? Because there are very good reasons for venture capital to be local, and yet data seem to suggest that US VCs are spending more and more, investing more of their capital in overseas business opportunities. So I began to wonder about why that might be the case, and I spent some time in Silicon Valley talking to a few venture capitalists, and my timing was good because the internet bubble had just burst, and they had some time so they were willing to see me and talk to me, and subsequently collected some data, and in collaboration with Akie, we did some analysis, and what we found was a very interesting conclusion, which is really that the globalization of that industry is very closely linked to people movement. Let me explain what I mean by that. Conventionally, if you ask the question, why is this particular industry, or any industry for that matter, globalizing, you'd look for explanations like technology, right? You'd look for explanations like government regulations, liberalization, those kinds of things. Now, venture capital is a little bit different because the network nature of the industry means that a venture capitalist is not very keen to invest overseas, for the simple reason that in order to monitor what is happening with that company, if he or she has to get on a plane and go somewhere else, that's not a very good use of their money, of their time, excuse me, right? So in fact, some of the people I talked to said, I will not invest in any company that's more than about 2 hours by car, right? So then the question is, why are they doing this? Right? So what we found when we did some analysis is that the rate at which US venture capital goes to other countries is predicted by the rate at which professional immigration takes place from those countries into the US, with a time lag of about 10 years. Right? Right? So what happens in a typical case is that, let's say that you have somebody who's coming to graduate school in the US from China or India or Israel or in any one of those places. A typical career path might be that they spend a few years in graduate school, work in Silicon Valley for a few years, right? Collect some experience, financial capital, etc. And then they strike out on their own, right? Some of them become successful, right? And very often what happens is that they manage to either do an IPO or sell their company, and all of a sudden they have a few $1 million, right? And very often what these entrepreneurs then do is they tend to become serial entrepreneurs, right? And one of the things they tend to do is to invest back in their home country, right? And in such an instance, very often they go back to the US investors who had invested in their company and say, look, I'm going to invest back in Israel. So it's a very interesting proposition there. Do you want in on this deal, right? And so look at it from the standpoint of the US venture capitalist. Here is somebody that they've already invested in, right, has been successful, who is giving them an opportunity to invest in one more potential deal. And on top of everything else is saying that, look, you don't have to necessarily travel to Israel or to India or to China to monitor what's going on, because this individual is going to do that anyway, right? They're going to travel maybe 3-4 times in a year. And so what that means is that it makes it much more feasible for the US venture capitalists to participate in these investment opportunities on a worldwide basis. So that's in a nutshell is what we find